Yesterday was a rather quiet session seen in the global markets due to the closure of the London and as well as the US stock market cash session over here. However, the two key US major stock indices futures, which is the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures, managed to lodge positive gain yesterday, and other major benchmark global stock indices, pardon me, like the Nikkei 225 powered up to a fresh all-time high in line with a softer US dollar. Interestingly, gold prices failed to rally dramatically due to rising rate hikes bets as being priced in the Fed funds futures market, indicating that the earlier Fed rate cut odds that was seen at the start of this year totally got evaporated, and market participants in the Fed funds futures right now are looking for a interest rate hike before 2026 ends. That actually causes gold to remain lackluster, where gains are being kept below its 20-day moving average, acting as a near-term resistance at around the $4,600 per ounce. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Tuesday, the 26th of May, 2026. So before we kickstart today's Daily Dose, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. So here we go. So let's have a quick update on what has taken shape in the last 24 hours and as well as in today's early Asia session in terms of the relevant news flow slash economic data releases, if there are any. So let's move on to the relevant news flow first over here. All right, let me share my screen. All right, over here. So I think it's know that the U.S. administration officials continues to drum up rather positive, optimistic remark pertaining to this imminent U.S.-Iran peace deal over here. So Trump yesterday mentioned over one of his public speeches, stating that negotiation with Iran over an interim deal to extend their ceasefire and reopen the Strait of Hormuz were proceeding nicely over here. And as well as an Iranian delegation has traveled to Doha for consultation with senior Qatari officials. So Qatar is something like one of the middlemen to actually help to lay out the middle ground between and Iran. And as well as on the Iranian side, they actually demanded the release of frozen Iranian funds in order for this so-called interim deal to get ironed out over here. So both sides still needs to finalize key details, including whether ships transiting the Strait of Hormuz will be allowed free passage. Do not still recall that Iran side actually demanded some kind of toll fees in order for them to actually sit down to actually has this interim deal ironed out over here, and also how quickly the billions of dollars of Iranian funds will be unfrozen. So this more like sunshine monies in the last couple of years. So net overall, this piece of news is rather optimistic as being priced in by the FX market yesterday, where the dollar actually did that setback, and we start to see the rest of the world global stock market rose dramatically, ranging from Asia, Japan, Korea, Singapore, and even in Europe as well, like the German DAX. I'll share with the German DAX actually broke above a key uh, 3 months plus of descending resistance, which we highlighted yesterday. So the US stock market will close yesterday, so rather muted trading in the US E-mini futures. But what's interesting over here is that, yes, we may see this optimism that is being played out in the so-called the stock market. But however, over in the fixed income market is still looking for a potential rise in a the US Treasury yields over here. So what causes this rise in the US Treasury yields is due to a hawkish pricing by the CME FedWatch 2 based on the latest price action behavior that is being seen in the traders in the Fed funds futures market. So this is the CME FedWatch 2. So let me refresh it over here. That is able to pick up the latest price action. It's not really live, but it's kind of delayed by 2-3 hours. Okay, give me a couple of seconds for it to let it run. All right. Let's go to the aggregated tab over here. So over the aggregate tab, you could see the pricing odds as being portrayed by the Fed funds futures traders computed by the CME FedWatch 2. So current Fed funds rate is at 3.5% to 3.75%. So if you look down the calendar over here until the last meeting of this year, which is the December the 9th, 2026. Earlier on, there was some signs of not some signs, some bets that the Fed funds futures traders placed to include a possibility of a rate cut before 2026 ends. So this rate cut bets has been totally evaporated. And now the Fed funds futures traders are pricing high chance of more than 50%, to be precise, 73%, that the Fed may do a 25 basis point hike on the last meeting of this year, which is the December the 9th, 2026, to bring it up to 3.75% to 4%. And very, very high chance of 90% at the start of next year, which is on January the 27th, 2027 FOMC meeting, and also March 17, 2027 FOMC meeting. So both are hovering at close to 90% chance of a rate hike. So with this rate hike bets got increase of more than 50% as the Fed funds futures trader starts to price in that the Fed will start to increase rates rather than cutting rates due to the sticky inflation as being a play out by oil prices that could remain elevated, given the fact that yes, we may start to see a US Iran interim peace deal, but do not forget that in the past 2.5 months, oil production facilities has been more or less damaged in the Middle East due to the bombardment of by Iran towards the Gulf nations' oil production facilities. And in order for them to return to normalcy, it takes some time to rebuild such infrastructure. So oil prices may continue, oil supply may continue to face the crunch going forward into the remaining months of 2026. And that has been kind of priced in by the Fed funds futures traders. And that causes the US Treasury yields to remain on support over here. So let's look at the longer term US Treasury yield. So if you were to look at the 30-year, all right, so let's go down to the daily time frame. All right, so this is the 30-year US Treasury yield, a very, very long-term risk-free rate that global, we call it banks use to price for longer-term loan products. All right, so yes, we may start to see 3 days of decline starting from last Wednesday. And in today's Asia session, we managed to see a bounce off at the 5% psychological level and also a bounce off from the rising 20-day moving average. All right, so that's for the 30-year. So indicating that the uptrend that has taken shape since the short-term uptrend, the medium-term uptrend that has been in place since early March this year remains intact. As for the 30-year, the 10-year US Treasury yield also showing the same signs of support. Today's price action also managed to stage a bounce close to 4.45%, which is the lower limit of this ongoing medium-term ascending channel from the low of 27th of February this year, and also exactly right above the rising 20-day moving average, also indicating that the medium-term uptrend phase for the 10-year US Treasury yields remains intact. So with this positive technical development indicating that both the 10-year US Treasury yield and the 30-year US Treasury yield continues to oscillate within their respective medium-term uptrend phase, which suggests that longer-term funding costs may rise in the remaining months of 2026. And that could potentially suck up some optimism that is being seen in the global stock market right now. All right, that has not starts to price in a potential rise in longer term funding costs over here. All right, so sometimes you know that markets there's this leak and lag situation over here. We got to take things one step at a time to allow the short term optimism to play out first before it starts to see such longer term pricing in of intermarket relation or intermarket analysis, where longer term funding costs may continues to be on the upside, given that I share with you the charts of the 10-year US Treasury yield and the 30-year US Treasury yield over here. All right. And also over here, what's interesting over here is that we know that the dollar yen continues to remains on the uptick. But however, the Bank of Japan officials has starts to come in and relay a very interesting message in today's early Asia session. So as reported by Investing Live, so this was out a while ago over here. So Bank of Japan Himino, Himino is the deputy governor of Bank of Japan, which is a key Japanese BOJ officials, reaffirms the current Bank of Japan gradual interest rate hike path. That means they are still looking for interest rate hike gradually, not interest rate cut, but to calibrate in line with the current situation that is happening in the Middle East. All right. So basically, Himino flagged out that the Bank of Japan intends to continue rising its policy rate gradually, adjusting the degree of monetary accommodation in line with economic activity, prices, and financial conditions. So all that dependent on the situation in the Middle East, which is the US Iran a fiasco, I would say. So basically, what he mentioned is that yes, BOJ is still on the path of gradual interest rate hike, but the timing of this interest rate hike will be dependent on the situation that is unfolding between US and Iran. Right, so something to take note of. So meaning that there could be still chance that BOJ could starts to think about rising rates towards the third quarter and the fourth quarter of this year. Okay, so that pretty much sum up the first segment of the daily dose. So now let me move on to the second segment. So the second segment today, I will not cover all the intraday outlook which I did yesterday. I will only touch on various key cross asset classes that is showing interesting intraday technical development at this juncture. All right, so before we jump straight into the charts, let me do some expansion of the screen so that you guys could have a better view of the charts right when I flash it out for you guys. Okay, so now let us move to the charts over here, starting with the FX market first. So the FX market, I want to highlight the euro dollar over here. So the euro dollar yesterday, during the start of the US session, it did a minor setback over here. So this minor setback managed to form a bit of consolidation right exactly at our first support level that we highlighted yesterday, which is at the 116.35. So with that, without any clearance above the first resistance level, which is 160.60, I will not tighten my pivotal support to 116.35. So 116.35 will be my first intermediate support level to watch. And in order to maintain this ongoing minor bounce that has taken shape since the low of 21st of May over here, I'll be still using yesterday's pivotal support zone, which was very in line with the gap up seen yesterday's early Asia session at 116.15 slash 1606. Maintain our minor rebound slash bullish bias scenario above 160.60. Intermediate resistance exposes 116.85. A breakout above 116.85 may increase the odds of a start of a new fresh bullish impulsive upmove sequence for the euro dollar to set sign in first step at 117.20, which is the congestion area of February the 8th, and the high the the minor swing high of 14th of May. And if we were to do a Fibo retracement, taking into account of the decline from 6th of May all the way down to the low of 21st of May, that also confluence with the 61.8 Fibo, the golden ratio of 61.8 level. And if we do the Fibo extension, taking into account of this ongoing minor recovery, that also confluence with a Fibo extension level of 2.618. All right, so indicating that this 1720 level is a key inflection level due to Fibo analysis, all right, from the retracement side of things and from the extension side of things. However, if price action don't move up as intended and starts to trade lower and breach below 116.15 slash 116.06, this recovery scenario will be invalidated to see a choppy decline to retest last week low at 115.85. Only a breakdown below 115.85 may expose further weakness towards 115.55, which confluence with a key medium-term ascending trend line that has been in play since 13th of March 2026 low. All right, so that's for the euro dollar. Still maintaining our bullish bias using 116.15 slash 116.06 as my short-term pivotal support. Onward next will be a highlight on one of the major a major key global stock indices, pardon me, will be the Hong Kong 33 over here. So Hong Kong 33, I do take note yesterday, mentioned that do keep a close eyes watch on the support level that I highlighted previously, 25,267, because yesterday the Hong Kong cash market is closed for a public holiday, so no trading yesterday on the futures market. So therefore, the Hong Kong 33 CFD index, there's no price movement as well. So what you could see over here is that there is a potential ongoing minor rebound slash recovery that's going on the Hong Kong 33, supported by a strong bounce that is being seen right exactly at the previous 2nd of April and 8th of April gap up support, which is at 25,267. So still no change, given the fact that he hasn't broken above the upside trigger level at 25,850, which is the 50-day moving average as well. But however, we now start to see a pre-bullish breakout as indicated by the hourly RSI that is showing signs of improving bullish momentum, breakout of a former descending trend line, and prior to that, it starts to shape a bullish divergence as well, indicating a very strong chance that 25,850 may be taken out on the upside. So right now, if 25,850 is taken out on the upside, I would tighten my pivotal support level from 25,267 all the way up to 25,510. Above 25,850, the next two resistance level to watch in the near term for today will be at 26,080, 26,210. All right, so still maintaining this ongoing mild short-term slash bullish bias on the Hong Kong 33 CFD that is representing the Hang Seng Index for today. However, if price action don't break up as intended and starts to break down below 25,267, then today's mild recovery slash short-term rebound scenario on the intraday basis will be invalidated to see further weakness in first step exposing the next intermediate support level at 24,890, which is the 2nd of April 2026 minus swing low. Onward next will be the Germany 30, which is very interesting right now. So yesterday it did a bullish breakout as intended above 25,215, 25,300. All right, so this is the German 30 representing the German DAX over here. So this 25,215, 215, 25,300 is the former medium-term descending trend line that has been in place since the current all-time high that was printed earlier this year on 13th of January. So this is close to about a 6 months plus of resistance that got taken out yesterday. So with this bullish breakout that is being seen over here, so I would now tighten my pivotal support level all the way up to yesterday's European session low and also close to this lower limit of this ongoing minor ascending channel that I drew from the low of 18th of May. So that will be at 25,045. Let me put it in writing. 25,045. This will be the Titan short-term pivotal support for today to maintain this ongoing bullish bias that I have on the Germany 30. Okay, so this will be the next support level. Okay, give me a minute. Let me tidy it up. Okay, notice that there's a Fibo extension here. 45, 26,660. 25,645/660. Okay, from two different angle. The Fibo extension. Okay, one I took it from a medium term perspective, which is the rebound from 23rd of March, and one I took it from a shorter term perspective from the rebound of 18th of May. So we have two Fibo extension level conferencing very closely at 25,645, 25,660, and that also comes close to the top of this graphical ascending channel as well, so making it as a key inflection level. So to sum it up everything into perspective, all right, over here, first near-term support level to watch will be 25,210, which is very close to the pullback line of this former 6 months descending resistance that got taken out yesterday, this gray line here. But I don't put it so tight, this level, given the fact that it hasn't cleared above the first resistance zone that we highlighted yesterday at 25,410, 25,890. So I will use a slightly lower pivotal support level at 25,045, that confluence to yesterday's European session low, and as well as the lower limit of this minor ascending channel. So as long as any pullback that managed to hold above 25,045, we'll maintain our ongoing bullish bias on the Germany 30 CFD. Clearance above 25,480, 489 over here, 25,489. Then I will tighten my pivotal support to 25,210. Next resistance level to watch will be 25,645, 25,660, as explained to you guys earlier. However, if price action don't bounce up as intended and starts to break down over here below 25,045, that would invalidate today's direct bullish bias view to kickstart a minor corrective decline sequence, exposing the next two intermediate support level, 24,793, 24,663, maximum 24,525. All right, so that's for the Germany 30, maintaining our bullish bias with adjusted short-term pivotal support. Next will be an update on the major US stock indices, starting with the US Wall Street 30 that is representing the Dow Jones Industrial Average. So like I mentioned, there could be a risk of a pullback. The pullback indeed takes shape. So over here, something level still remains the same. This will be the intermediate support level to watch, where the pullback is now stalling at right above it, 50,760. Current price action is 50,895 on the US Wall Street 30 CFD, which is quoted at 11:28 a.m. Singapore time now as I'm speaking. So given the fact that he hasn't cleared above this resistance level of 51,058, I do not want to tighten the pivotal support to 50,760. So pivotal support will remain the same at the former all-time high level at 50,541, 50,390. So it's a zone over here. All right, over here. So above 51,058 will potentially take us up higher towards the next resistance level at 51,205, 51,320. All right. However, if there's a price breakdown below 50,541, 50,390, the potential bullish impulsive upmove sequence will be invalidated to kickstart a minor corrective decline towards 50,165 in the first step. All right, so that's for the US Wall Street 30. Next up will be the SPX 500. So the SPX 500 also didn't break above 7,570 as I highlighted yesterday and did a pullback. Pullback stopped exactly at our intermediate support zone of 7,524, 7,496 over here. All right, this intermediate zone of 7,524, 7,496. So given that it hasn't cleared above 7,570, I do not want to tighten my pivotal support to be so tight at this intermediate support zone of 7,524, 7,496. So I'll be still using the same pivotal support level that I highlighted yesterday, 7,455. Breakout above 7,570, then I will adjust my pivotal support to 7,524 slash 7,496. Next intermediate resistance level to watch will be a bunch of Fibo extension level confluencing at 7,627, 7,632. All right, so still maintaining this potential bullish bias for today on the SPX 500 on the intraday basis. However, if we start to see a price breakdown below 7,455, bullish bias will be invalidated to kickstart a intraday corrective decline sequence towards 7,393. Breaking below it may expose 7,345, 7,316. That's confluence with the rising 20-day moving average. Next up will be the Nasdaq 100. So the Nasdaq 100 also continues to trade as intended. Did a pullback. Now pullback hitting our first support level at 29,704 before stalling in today's Asia session over here. So with that, we will still maintain. Okay, let me do some adjustment on the pivotal support for today. All right. At 29,433. Okay, which is close to yesterday's, not yesterday, sorry, Friday US session low, right? 24,433, right? This and also this minor swing low that was being seen when the gap up formed in yesterday's Asia session at 29,433. So this is a minor swing low, and this minor swing low confluence with the former minor swing high and the bullish Marubozu hourly candle that was formed on the US session at 1 a.m. Friday, 22nd of May. 1 a.m. Singapore time, Friday, 22nd of May, which is US session Thursday. All right, so with that, do a bit of adjustment. So given that it hasn't cleared above 29,953, I do not want to tighten my pivotal support level to 29,700. So I'll use a slightly upward adjusted 29,433 as my short-term pivotal support for today on the Nasdaq 100. Maintain our bullish bias. Above 29,953 exposes the next intermediate resistance level at 30,318. 30,425, which is a bunch of Fibo extension cluster level confluencing at this similar zone over here. Only a bearish breakdown below 29,433 that will invalidate today's bullish bias stance to kickstart a minor corrective decline towards 29,000 figure level, psychological level, as well as the minor congestion of 20th of May that you could see over here. Breaking below it exposes 28,660, which is a key support level, given that it managed to survive on 13th of May, survive on 19th of May, and as well as now confluencing with the rising 20-day moving average at 28,660. Right, 100. So now let us now have a quick look at the commodities market. All right, over here. So on the commodities market, let's take a look at the. Okay, give me a minute. I think it's hang. I'm not sure why. Okay, let me refresh the chart. Okay, let's look at spot gold. AU/USD. So spot gold continues to trade in a very boring range-like resistance over here. So like I mentioned, why gold is not able to recover significantly in line with the stock market, because gold is being a non-yielding asset classes. That means you won't receive income dividend from gold if you hold gold for And given that longer term interest rate is on the rise, as being seen on the US 10-year Treasury yield and the US 30 US Treasury yield, both the 10-year US Treasury yield and the 30-year US Treasury yield showing that their medium-term uptrend phase remains intact. So that could potentially cap gold prices in the interim as well. So no change for gold XAU/USD. Continue to monitor these two range neutrality stance. For now, 4,580 on the upside, on the downside, 4,500. So only breaking down below 4,500 may expose further near-term weakness towards 4,456. 4,415, which is the 27th of March 2026 low, and that also confirms now with the very closely with the 200-day moving average. So maintaining a neutrality stance between 4,580 and 4,500 for now. Next up will be the West Texas crude oil over here. So the West Texas crude oil continues to trade lower over here, with that holding below the 100.80 short-term pivotal resistance that we highlighted earlier on. And also, if you look at the hourly RSI, it continues to be kept by a descending trend line below the 50 level mark, indicating that bearish momentum still remains pretty much intact for the West Texas oil. So with price action plunging lower from a risk management perspective, I will now tighten my short-term pivotal resistance that we have yesterday at 100.80 to 97.40 for today. All right, 97.40. Okay, then this will be the next intermediate. Let me do a bit of tidy up. This is the 50-day moving average. 100 level. The 21, which is also confluence with the minor swing high of 22nd of May, Friday, before the large intraday plunge take shape that kickstarted yesterday, Asia session. That is 102.56. Okay, this should be tidy up. Okay, so for now, we will maintain our short-term intraday bearish stance on the West Texas oil using a tightened short-term pivotal resistance for today, 97.40. So as long as that 97.40 is not surpassed to the upside, potential near-term weakness may unfold for West Texas oil. Intermediate support level to watch for today, 90.50, the minor swing low of 6th of May, followed by 86.60, the 20th of April 2026 gap up at the point in time. All right, only a bullish breakup above 97.40, that means a breach above 97.40, that would invalidate today's direct bearish bias view to see a minor corrective rebound sequence unfolding to retest the 50-day moving average again and the 20-day moving average, confluencing at the next intermediate resistance at $100 per barrel, followed by 102.56. Right, so that's for the West Texas oil, maintaining a bearish bias view with a tightened adjusted short-term pivotal resistance at 97.40. All right, so let's sum up the second segment of the daily dose. Let me now touch on the third segment, which is the key economic data / event to look out for today. So now let us head to the calendar. So today will be the 26th of May, Tuesday. So for those who have interest in the Singapore's so-called equity market over here, we do have industrial production. Sorry, pardon me. Today, where is it? Yeah, Tuesday, correct. Okay, Tuesday, May 26th. I'll repeat again. So those who have interest in the Singapore stock market and the dollar Sing FX rate, we do have one tier one Singapore data that is out at 1 p.m. Singapore time today. Industrial production year on year. So market is expecting a further improvement in our manufacturing sector, which is the industrial production year on year. Previously, March print was at 10% year on year. We're now at market is expecting a jump to 12% year on year. All right. Then as the London session unfolds over here, no key European slash UK data to chew on. And once the US session kickstart, we have a tier one US economic indicator, which is the Conference Board Consumer Confidence. So we know that in US, there's two body that is compiling consumer confidence. One is the University of Michigan, which released their finalized print for May that hit a fresh autumn low. So market will be also looking at how the Conference Board Consumer Confidence fare, which is done by a separate body. So market is expecting a further dip to 92 from the previous month April print of 92.8. All right, so that will be at 10 p.m. Singapore time today. So on top of this key economic data, the event to look out for will be this ongoing US-Iran relationship, as both sides continues to lock down in negotiation, where the past 2 or 3 days, US officials has been painting a rather rosy picture of an interim peace deal. So that could also have a significant influence on the global cross asset classes today as well. So with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off. So bear in mind that tomorrow will be a public holiday in Singapore. So no daily dose for tomorrow, and daily dose will resume again on Thursday. Thank you.